the Ghana CEO Summit as governor of the Bank of Ghana. And I want to thank the organizers for this invitation. It is also in many ways a timely moment for this conversation as we embark on a reset journey for Ghana's economy. Colleagues, we are not here simply to review macroeconomic progress. Rather, we are here to reflect on what it will take to transform a reset economy into a resilient, into a forward-looking enterprise ecosystem. Colleagues, we meet not just as policymakers and private sector actors, but as co-architects of Ghana's next economic chapter. And that is what I hope will guide our deliberations at this forum today. Colleagues, when I assumed office as governor earlier this year, barely 3 months ago, I laid out 6 core priorities that should guide the bank's work. And permit me to recall these. The first was to establish a modern, transparent, and predictive monetary policy framework. The second was to ensure a credible foreign exchange market, a market that is anchored in sound reserves and reduced volatility. The third priority was to strengthen regulation to ensure a stable yet responsive banking system. The fourth priority that I mentioned was to ensure that innovation and inclusion through fintech, through digital finance, and regulatory transformation become the order of the day. The fifth was to ensure an alignment between monetary and fiscal policies without compromising the Bank of Ghana's independence. And finally, was to restore the Bank of Ghana's own balance sheet strength to preserve long-term institutional credibility. Colleagues, these priorities reflect not just institutional responsibility, but the demands of our time. The Bank of Ghana must be clear in its purpose, it must be consistent in its actions, and it must be transparent in its operations. We have to communicate better, we have to regulate smarter, and we have to engage more. So for us at the Bank of Ghana, these are not abstract goals. They are the foundation for which building a financial and economic environment where you as business leaders can plan, can invest, can grow, and can lead. They are what underpin confidence in the city, in interest rate direction, and in the policy rule book. This vision is also grounded in the belief that monetary stability is not an end in itself. It is a platform for transformation. And that transformation must come from the private sector. Colleagues, let me give you a sense of where we are today in the reset journey. Our growth prospects remain strong based on recent data, as our real sector indicators are all pointing to a pickup in economic activity, and these are largely driven by exports, by credit to the private sector, and by construction activities. Also, we know that the Ghana Purchasing Managers Index rose above the 50 benchmark as output and new orders increased, signaling improved growth prospects. Similarly, the latest confidence surveys have showed significant improvement in consumer and business indices. And we know that this is the highest in the last 7 years, mainly based on easing inflationary pressures and optimism about macroeconomic conditions. Colleagues, as you are aware, headline inflation has declined steadily over the past 4 months, reaching 21.2% in April, down by 2.6 percentage points since the beginning of the year. Our gross international reserves have improved to about 11 billion US dollars, which is equivalent to 4.2 months of import cover. And the cedi, our cedi, has appreciated by 24.1% against the US dollar on year-to-date terms. Now, colleagues, let me emphasize that the central bank is not, and the not is in capital letters. The central bank is not using its international reserves to support the cedi, nor are we engineering an appreciation in the cedi that will not be sustainable. It's all market-driven, and the strengthening of the currency reflects a blend of disciplined monetary policy, tailored foreign forex auction reforms, enhanced remittance channels, and stricter market surveillance. These are not mere short-term interventions. Colleagues, last week, the Monetary Policy Committee met. They met and voted unanimously to maintain the policy rate at 28%. This decision reflects our commitment to completing the disinflation process, with inflation now projected to return to our target band of 8 plus or minus 2% by the first quarter of 2026. As part of that strategy, effective June the 5th, we are also amending the cash reserve ratio requirement on commercial banks. In other words, banks will now maintain their CRRs in the same currency as their liabilities, and that is foreign currency reserves for foreign currency deposits, and cedi reserves for domestic deposits. Colleagues, this supports better forex risk alignment and encourages more efficient liquidity planning. We have also made structural reforms to improve credibility and transparency. We now publish individual MPC voting positions, as some of you would have realized, and we release policy decisions on the same day. These changes, colleagues, are not cosmetic. They are part of building an institution that communicates clearly, an institution that acts predictably. Colleagues, recent business confidence surveys reflect the highest levels in 7 years, as I've mentioned, and this has been supported by easing inflation, credit flows, and renewed optimism about Ghana's growth path. At the same time, we remain alert, very alert, to external vulnerabilities, be it from disinflation divergence in global financial markets or the proposed 5% US tax on outbound remittances. Clearly, these risks remind us that vigilance is still required in our forward journey. Colleagues, if the macro reset belongs to the central bank and also the fiscal authorities, then the enterprise reset must belong to you, CEOs. I understand the weight of your responsibilities, your margins, your margins are tight, talent is mobile, and your markets are demanding. But in this environment, colleagues, leadership isn't about avoiding risk. Leadership is about managing it with purpose. And that's where the public and private sectors must work together. Like many of you CEOs, I have had to make decisions in the last 3 months, decisions based on imperfect data, under intense scrutiny, and in real time. The difference is only in our titles, but the responsibility in doing so, to lead wisely and to lead with integrity, is the same, we and yourselves. Your leadership is now central to building a more resilient Ghana. Indeed, the private sector is not a bystander. You are the builders of jobs, you are the drivers of innovation, and as businesses, the stewards of risk, and the enablers of long-term productivity. Now, allow me to propose or to suggest a simple 4-point CEO manifesto for this moment as you deliberate today. The first is that you must drive productivity through innovation. Not just cost cutting, but you must embrace tech-led transformation. The next is that you must develop future-ready talent, and that means investing in skills, leadership pipelines, and inclusive workplace cultures. Third is that you must expand Ghana's productive footprint, and talking about value-added exports, regional trade based on the opportunities that abound, and industrial scaling. Then the fourth one I want to leave with you is on model resilience and governance. And that is in reference to strong boards that you need, the ethical leadership, and the long-term strategy that you need to drive your business models. This, colleagues, is what I call a national reset, and this is what it requires. If we rebuild macro stability but maintain outdated business models in industry, we will have missed the moment. In other words, the Bank of Ghana can stabilize the playing field, and we are committed to do so, but it is you, CEOs, the private sector, who will shape the game at the end of the day. Now, we do recognize that to lead effectively, CEOs such as yourselves need clarity, not just on what our policy is, but how it is shaped, why policy changes, and what our policy signals are. That's why at the Bank of Ghana, we are not only reforming our tools, as we have announced, we are reforming how we engage with you, industry. Colleagues, we have begun opening our Monetary Policy Committee sessions to invited observers from the Ghana Union of Traders Association, observers from the Chartered Institute of Bankers, and observers from the academia. And we had some of their reps joining us last week. We will be extending this invitation to industry going forward. And, of course, the CEO network. You will be invited as well. Colleagues, we are also exploring the creation of a Bank of Ghana versus CEO forum, a forum that is a structured platform to foster timely dialogue. A dialogue that can help gather market intelligence and improve policy alignment. We draw inspiration from global best practices such as the U.S. Federal Reserve, despite its complexities today. The U.S. Federal Reserve has long relied on regional CEO councils for real-time feedback. So too have central banks in South Africa and Brazil. These platforms help regulators understand market conditions before they show up in data. So this isn't about co-authoring policy. It's about ensuring that our policies are informed by a grounded understanding of how they impact investment, how they impact credit, and how they impact enterprise. Insights such as early shifts in supply chains, credit trends, or investment sentiment can go a long way to help we regulators to act sooner and to act better. We believe this is a smart evolution in central banking versus private sector relations, and we hope you will be part of it going forward. Colleagues, monetary and financial stability are inextricably intertwined. Disruptions in the financial system can constrain credit creation, it can induce persistence in market interest rates, and it can trigger exchange rate volatility and impede monetary policy transmission with negative pass-through to inflation and output. Therefore, safeguarding financial stability is widely recognized as an important dimension of maintaining macroeconomic and monetary stability. And the Bank of Ghana, as a steward of financial stability, has taken decisive steps moving beyond traditional supervision toward a more proactive, a more risk-sensitive, and system-aware model, what we call the forward-looking type of supervision. Colleagues, this approach is not just about compliance, it is about shaping a banking system, a system that is agile, a system that is accountable, and a system that is equipped for a fast-changing world. Certainly, our job as a central bank is not just to preserve stability, but our job is to prepare the system for future shocks and opportunities that will inevitably come in the future. So that is why, for example, we are advancing our roadmap for regulating virtual asset service providers. An example is the crypto industry in line with global standards. We are aware that we have nearly 17% of Ghanaian adults already holding crypto assets, including strong adoption among our youth, among tech entrepreneurs, and even among women-led businesses. Therefore, we cannot afford a regulatory vacuum that has existed for this while. Colleagues, the proposed framework will be submitted to Cabinet by September, hopefully, and will clarify oversight and collaboration roles when it comes to the Securities and Exchange Commission and the Bank of Ghana, as well as other relevant agencies. We are also taking steps to operationalize Ghana's open banking guidelines, as well as digital banking frameworks that will enable secure data sharing, frameworks that will drive financial innovation, and frameworks that will enhance consumer choice across the financial services industry. We have established an AI and data analytics office, which is already enhancing real-time risk monitoring, supporting monetary analysis, and improving financial surveillance. We are also embedding climate and ESG risks into our on-site supervision frameworks. Forward-looking supervision, as I mentioned earlier, is now our new regulatory standard. A standard that emphasizes early risk identification, tech resilience, governance discipline, and macroprudential coordination. Colleagues, we are working closely with the Ministry of Finance, with SIGA, and with the Ghana Stock Exchange domestic capital markets, even as economic stability returns. We are looking at this not just as a financial sector reform, but as a catalyst to spur economic growth. This will include preparing the state-owned enterprises for listing to unlock value and transparency. It will include encouraging bank participation to widen ownership, and it will include reopening the domestic bond market with benchmark securities that will support infrastructure investment. These efforts are aligned through a joint capital market development strategy modeled on coordinated approaches seen in more advanced economies. Colleagues, our aim is to shift from short-term consumption financing to long-term investment-led growth that is underpinned by domestic capital. Ladies and gentlemen, this reset, therefore, is not about slogans. It is about rebuilding trust. It is about restoring confidence, and it's about preparing our economy for the next decade. Now, 10 years from today, few will remember the exact 2026 inflation rate, for example. But they will remember whether we built a financial system that created opportunity, that rewarded innovation, and that empowered Ghanaian businesses to lead at home and across Africa. At the Bank of Ghana, we are reforming how we regulate. We are reforming how we communicate, and we are reforming how we partner going forward. But the true test will be what you do next as stewards of capital innovation and employment. Let us make this the moment where Ghana's public and private leadership rise together, not just to recover, but to reinvent. And of course, let me take the opportunity, before I take my seat, to invite all of you to the 60th anniversary celebration of the Ghana cedi, our cedi, Kwame Nkrumah's cedi, which was introduced in July 1965 by Ghana's first president, Dr. Kwame Nkrumah. A number of events are lined up to mark the anniversary of the cedi in July, and we shall soon issue guidance to this effect. But let me emphasize that the cedi, our cedi, remains the only legal tender in Ghana. And I put that in capital letters. The cedi is the only legal tender in Ghana. And as businesses, we must ensure that transactions going forward are conducted in our local currency. I want to thank you for this opportunity once again, and I look forward to the ideas and partnerships that we'll establish today from this summit.
For General Insurance, the CEO of Enterprise Insurance, Akosia Ansa Enchi. CEO of the Year 2024, Private Chairman of the KGL Group, Mr. Lex Apau Dade. Also received for Trade Technology Products Sector, the CEO of the Year is the CEO of the Omega Group, Andrew Nana Kufuor. Enterprise Technology Sector, ladies and gentlemen, Emerging CEO 2024, the founder and CEO. CEO of the Year 2024, Real Estate, Large Scale, the CEO of Clifton Homes. And for the Poly Products, Tanksok Mohinani. Ladies and gentlemen, we proceed to also acknowledge the Agribusiness 24, the country head, Agri Olam, Group CEO of the Media General, Madam Beatrice Ajiman. Sector Downstream Petroleum Leadership Excellence Award goes to the CEO. Insurance sector, ladies and gentlemen, the Group CEO of the Year 2020. CEO of the Year, ladies and gentlemen, the CEO of Rockstar Roofing Systems Limited. Private health insurance drinks, and the CEO of the Year 2024 goes to the CEO of Special Group of Companies, Dr. Ernest Ofori Sapong. Health Consultancy Human Resource. He also receives the Entrepreneur of the Year Award in the Entrepreneur category to Commodities Limited, Hajia Maria Adamu Zibo. Hospitality Hotels, ladies and gentlemen, the General Manager, Kempinski Hotel, Gold Coast City, Accra, Hanoff Bakoff, Engineer Edward Eko Obing, Ken Insurance, I beg your pardon, Madam Jacqueline Benyin. And I ask that we all rise and affirm our belief and faith in our nation. God bless our homeland, Ghana.
What's up, people? This is your darling boy, Darling, to make a worry by AC Cab, if you keep watching Morris TV. Don't go anywhere. Worry about